we're one of the fastest growing sectors in the market.
Later life lending starts much earlier than many people realise.
Hello, and welcome to Mortgage Introducer TV, where today we're discussing how later life mortgage lending is evolving from a niche to a core part of the UK advice market. I'm delighted to be joined by our guests, Leon Diamond, Chief Executive Officer and founder of LiveMore Capital.
Good morning. Happy to be here.
Great. Happy to have you, Leon. And Darren Deacon, Head of Intermediary Sales at Family Building Society.
Hi, nice to meet you again, May.
It's great to meet you both. So why don't we start by getting to know a bit more about your businesses and why you think later life lending is now more important than ever in today's mortgage landscape. Why don't you just give us a bit of an introduction? How about we start with you, Leon?
So LiveMore Mortgages is a mortgage lender focused on pre-retirement, post-retirement income. We have the widest solutions in the marketplace, from capital and interest, part and part, interest only, retirement interest only, and equity release. So we're looking to be a solutions provider for the underlying borrower working with mortgage brokers in the market.
That's great. And how about you, Darren, in Family Building Society?
Yeah, well, obviously, as a building society, we were once known as National Counties, and we rebranded in 2014 to Family Building Society. So we are very active in the later life market. We deal predominantly 95% plus of our business is intermediary led. So we're very much focused on the intermediaries and on the intermediaries. So yeah, we've been active in this market certainly for the last 10 years or so. We've seen that it's changed and it's evolved, and we're looking to offer solutions in standard affordability led mortgage lending.
Excellent. Thank you both. So one thing I'm sure our audience of brokers would like to know is, how does later life affordability differ fundamentally from mainstream lending? And what lessons can the wider market learn from specialist approaches that move beyond traditional credit scoring? How about we start with you, Darren?
Yeah, well, I think actually later life lending starts much earlier than many people realise, and it's often associated with borrowers, maybe 50 or 55, but we know that the journey can begin decades sooner. It's not uncommon for a 35-year-old as a first-time buyer who might be taking a 30 or 40-year mortgage. So that will mean that they will be borrowing later into life, so right from the start of that journey. So what that does is an emphasis on the affordability assessments, and that they must really evolve beyond just simple salary multiples, and they also must include future passive income such as pension pots, state pension, ISAs and rental income. So through manual underwriting, lenders can apply responsible affordability assumptions. I mean, for example, we apply a modest haircut to a pension pot, and we can divide that across the balance for the mortgage term, which gives increased affordability, a more realistic affordability picture. So the restriction I see with a high street credit scoring model, it doesn't always align to this sort of tailored approach that's needed. It doesn't fit the complexity of modern later life incomes.
Sure, absolutely. Do you have any thoughts, Leon?
I echo what Darren said. We are a mortgage lender. Historically, we were focused on the over 50s. We've just recently moved that down to being 40 and above. And we take a holistic fact find working with brokers, taking into account, as Darren touched on, pension, savings, investments. Could be a buy-to-let property. It could be an insurance product. It could be gifting. And we understand the affordability of that person, not only today, but through the life of that mortgage. And so we work with brokers on finding solutions, the right solution for a customer for their life.
Excellent. So with older borrowers often drawing from pensions, investments, rental income, and earned income later into life, how do you think lenders can balance flexibility with responsible lending standards in this market?
We have leveraged technology. We've developed our own technology, and that's come from a data science background. We continually use AI to evolve our underwriting policy and improve our decisioning. So what we want to say is a stronger yes up front, and allow the broker to understand the probability of getting that complex client typically over the line. How we model that, we align our policy with MCOB rules, as well as understanding POS. And if I look at how we've lent to date, it's been in a very responsible way, and in terms of defaults, we've got 0 on our book to date. So I think we're moving in the right direction with over 5,000 plus customers, underlying borrowers who have worked with us.
And your thoughts, Darren, how can lenders balance flexibility with responsible lending standards?
Yeah, well, exactly as Leon says, responsible lending is at the heart of everything we do. We're no different to any other part of the mortgage market. I think contrary to some perceptions, lenders in the later life space can sometimes be seen as overly cautious. We've got a very low average LTV, the same as Leon, a very low arrears, negligible in fact. We've got customers have got strong credit histories with a good proven track record of paying their mortgages. And they're coming to us with, a variety of reasons, be it through purchase, remortgage or capital raising, and they've got strong incomes and varied incomes at that. So what we see is that we have a strong approach to manual underwriting. So it's crucial for us that we can see that income is sustainable in order that we can get to the right lending outcome. Where appropriate, we will insist on independent legal advice. And as I said from the start, we adhere to the same responsible lending standards as any mainstream bank.
Absolutely. So I know, Darren, you just mentioned that you have a strong basis with manual underwriting over at Family Building Society. But one thing that we've seen coming up is how technology can really kind of impact the landscape of lending. So what I'm interested in getting to know is how technology is being used to improve underwriting accuracy, speed, and consistency in later life lending. And where does it have the biggest impact on broker experience? Maybe we can get Leon's perspective on this.
Yeah, certainly. Look, we value technology, and we see that as allowing us to be more efficient. There is, in some of the cases, it's still a manual underwrite at the end. But what we want to make it, we want to work with brokers and make their lives more efficient. And so we developed what's called the LiveMore Mortgage Matcher, which allows a mortgage broker to input their customers' details. And then if the customer doesn't fit the affordability assessment, or it may be stretched, we will reoffer a certain mortgage or a different type of mortgage to that broker to give them options. Alternatively, if they don't like those options, we will highlight where they can potentially add additional income fields to get to either that affordability they want, or secondly, we highlight the maximum affordability. So our job that we see is to work with brokers to make them more efficient, to give them the solutions to give back to their customers.
Brilliant, absolutely. And yourself, Darren, does technology come up in conversations with how you're interacting with brokers?
Yeah, certainly. I mean, we know that technology is rapidly changing mortgage underwriting. I do not think that it will necessarily or fully replace human judgment, certainly in the markets that we operate in. I know we've seen advances in AI, machine learning, automation that are streamlining document processing, and obviously some of the things that Leon's touched upon there. So that does improve accuracy and reduces decision times. Massive benefits to the broker, obviously get cleaner case submissions, greater transparency. It just gives them more time to focus on client advice rather than fiddling about with administration, which we could all do without. So yes, we we're probably not as far down the journey as LiveMore, because we place a lot of emphasis on our BDM teams going out and educating brokers, which I think is crucial. But I think what makes us different in terms of, again, going back to automated modelling, which neither of us are fully in automated modelling, is that we can understand pensions and investments or the passive sources. And so we can try and fully understand them. And these often have stories behind each application. So I don't think that AI will completely rule decision making immediately. I might be proved wrong in the next 3 to 5 years, but I think at this moment in time, it is steady as we go, as far as we see it at Family.
Sure, absolutely. What we're hearing is brokers still very much appreciate the human touch when it comes to that business relationship. So it's excellent to see that technology can actually help to enhance that rather than kind of detract from that. So that's very good to hear. Yeah,
I think it needs to run in hand with it.
Absolutely. So here's one for you, Leon, and it's specifically about how LiveMore sort of operates. So LiveMore has challenged traditional affordability models using technology and broader income assessment. How should affordability frameworks for older borrowers evolve across the wider market, would you say?
Yeah, certainly. I would actually say that our affordability assessment is more detailed, gives us a better understanding of the customer than a mortgage looking at just a straight income multiple. So as an example, we've integrated with MAB in their CRM system into their fact find that allows them to ask the appropriate questions and then spits out the art of the possible. And quite often, a lot of the sourcing systems that are out in the market are quite linear, where you need to search for the product. What our LiveMore Mortgage Matcher allows you to do is to see what are the different types of mortgage solutions out there based on the affordability of that customer. And so what we see is giving the correct fact find and speaking and working with brokers on that fact find, we can really show the art of the options and therefore give better customer outcomes and actually have borrowers who are able to borrow and not turned away from this market, as many are.
Fantastic. And one for you, Darren. So Family Building Society, on the other hand, takes a case-by-case approach to complex income, including pensions, investments, and earned income into later life. Why is this flexibility so critical for older borrowers, would you say? And what risks arise when lenders rely too heavily on automated scoring?
Yeah, well, many older borrowers have complex financial incomes and therefore lending needs. So they need a more nuanced judgment and a context, I think, to the lending. So automated models alone often can't do this. So with our flexible approach, later life lending options, remains our responsibility. Now, I think technology does support this, as I said, with data processing, verification, consistency, etc. But that, for me, complements the human aspect that we bring to this. So I don't think it fully replaces experienced human underwriters, which we've got a lot of now. I think we all know people are living longer, working later, etc. So the affordability models need to adapt to the reality of modern retirement. Lenders have got a more flexible framework to make sure that their incomes are being fully assessed, understood. So ultimately we can get to the right mortgage solution. And I believe that manual underwriting is crucial, plays a big part in that.
Brilliant. Absolutely. So bringing you both back into focus now, I'd like to talk a bit about regulation. How do you think recent regulatory discussions from bodies such as the Financial Conduct Authority might influence later life lending over, say, the next 5 years? We can continue with you, Darren.
I think, first of all, it was good to see the FCA's consultation paper last year, and the fact that later life lending was given so much focus. It really highlighted the growing importance of the market. And it reflected on all sorts of different trends, such as older first-time buyers and people working longer. I think what it really highlighted as well is that later life lending should not be seen as a niche or a specialism, that it is actually part of the standard normal mortgage life cycle. So again, that was pleasing to see. In recent meetings that I've attended, people from the FCA have said that they are looking to reform the affordability assessment of REO mortgages, which is not before time, from my personal opinion. And I would hope to see that they will provide better outcomes for customers. So in the next 5 years, I can only see that by the FCA, by shining a light on the sector, you will get greater engagement from regulators, trade bodies, lenders, intermediary networks, just really to improve awareness and standards across the whole sector.
Absolutely. Thank you very much, Darren. Your thoughts, Leon?
Yeah, certainly. Look, this market's growing. We've got an aging population that's sitting on one of the most amounts of land wealth in the country, and underfunded pension schemes, and the cost of living is increasing. So the FCA's report is timely. They see that this market is growing and the need to get ahead of an expansion of what historically used to be later life lending. And to Darren's point is, we see this as being mainstream and moving into mainstream. And to meet the affordability needs is to understand a customer, a borrower's needs in a little bit more detail. So asking the affordability questions. I think the interesting part that the FCA highlighted are potentially ways of bringing together rules and educational process. So an advisor can advise on not only mainstream mortgages, interest-only mortgages, capital and interest mortgages, but also consider equity release amongst other mortgages that they are considering, to give the customer, the underlying borrower, the best outcome. So it's super positive. I think the momentum is gaining traction. We see it with different trade bodies. I think there needs to be a bit more clarity around the wording, that some of the words that are thrown about in the marketplace, to give the underlying borrowers just a bit more clarity. And if we see that occurring, I think that the whole market will expand and grow, because there is a definite need and demand for underlying borrowers to move into and lend later in life, have a mortgage later in life.
Absolutely. So if we could just stay with you for a moment, Leon, you mentioned a very interesting point there at the end. So what would you say lenders, advisors, trade bodies such as the IMLA, the AMI, the UK Finance, and the Equity Release Council can do more to support genuinely holistic later life advice?
Yeah, first of all, as I touched on last week, I think Darren was there, was clarity around wording. Right, we have wording today, which is a lifetime mortgage. Well, a lifetime mortgage could be a mortgage from Family Building Society. It could be a mortgage from us. But right now, the industry or the market, there's some grey area around that, as well as in the rules, that is seen as it's an equity release mortgage. And we see, the Dutch model coming into the market of, taking out a 50-year term, etc. Well, that is a lifetime mortgage. So I think we need to put the borrower first and how they interpret wording, and then start to build up. So I think there's clarity of use of language that needs to occur to grow the market, to give the borrowers comfort. And then also bringing in an educational piece together that allows mortgage brokers clarity on either to advise on all products or when to hand off to other people. And I think some more can be done in conjunction with the mortgage industry, brokers and lenders, to get clarity for the underlying borrowers to grow the market.
Absolutely. So what about yourself, Darren? Is there more that these bodies can do to support genuinely holistic later life advice?
Yeah, I was in the room with Leon last week, and there was a lot of back and forth in terms of what the trade bodies can do. What I think I'm seeing is the trade bodies are working collaboratively, which is good, obviously. I think one of the discussions that came out of it last week is really what is the remit really of true holistic advice. So how far does that go? Now, I 100% agree. Education is essential to delivering better outcomes for customers. So I think, whilst I think let's say the gold standard for a mortgage advisor would be for somebody that is effectively a one-stop shop that will take a first-time buyer all the way through to later life lending, if we're going to describe it in that way, and then everything in between, is possibly a little bit too optimistic. But I think through education, mortgage advisors, and this will come through the various trade bodies and obviously the regulators focus on the market, is that mortgage advisors need to broaden their understanding of all of the later life options, so including affordability based lending alongside equity release and lifetime mortgages. Too often we hear silos. I think we're probably all fed up with hearing silos, but I can't think of maybe swimming in your own lane, maybe something slightly different, but we need to break down those barriers. We want and need advisors who have, at the very least, have got let's say not the options, but they've got the understanding of the broader market. And if they are not able to advise in a certain area of that market, that they are at least able to clearly signpost that customer's need, and have got robust referral processes as well, so they can make sure that ultimately the customer is getting the right advice and the right solution that fits their circumstances.
For sure. Well, thank you both for those very insightful answers as to what more could be done to support the space holistically. So now I want to move on to how you view the space evolving. So Darren, if you would mind, would you be able to tell us what you think the future holds for this specific market?
Oh, positive, very positive with everything we've discussed in terms of focus by the main trade bodies and mortgage networks and the like, and things that we're doing now. And then it really brings the sector to the forefront. We know it's a growing sector, that is for sure. There was over £3 trillion worth of housing equity by older homeowners. So it's a massive opportunity for high quality advice. I think there was maybe slightly a stigma around later life borrowing, but I have seen over the last decade or so that it started to diminish. As I say, with increased regulatory focus, growing competition, continued market product innovation, will bring the market to a more mature and customer focused market as well. So I think as a result of all of that, later life is set to be increasingly more important in the mortgage life cycle, not only supporting themselves as borrowers, but also their wider family members. So yeah, I can only see that it's on a upward trajectory.
For sure. Fantastic. Thank you, Darren. Well, what about yourself, Leon? Where do you think the market's going to go into the future?
Yeah, we're one of the fastest growing sectors in the market. What we know, people are buying their first house later in life, and living longer, healthier, and pensions are getting squeezed, the cost of living's rising. So you're taking into account pension income and other forms of income. Why wouldn't you? To be able to get on the property ladder or remortgage your house or take some money off the table to live better or gift. And so we're super excited about the market. We think it continues to grow. We love where the regulators moving and engaging, speaking to lenders, to brokers, to trading bodies to get a better better outcome. And that better outcome grows the market. And so we're very excited about the coming years in this space, and see this as a big opportunity to satisfy and also improve the UK economy, and allow people to live a better life.
Thank you both so much for those very detailed, very insightful comments on the state of the later life lending markets. I've had an absolute blast, and I've learned a lot. So once again, thank you so much. Yeah, thank you so much, Leon. Thank you so much, Darren. So that's all we have time for today to Mortgage Introducer TV. Until next time, thank you for tuning in.